At Computex last month, AMD put up a slide that sounded like the most boring announcement in tech. They're extending support for the AM5 platform all the way to 2029. Most people's reaction was something like, cool, they're not abandoning their users. Good on them. But sit with it for a second, because something doesn't quite add up. AMD holds less than 20% of the discrete GPU market. They've been playing catch-up to NVIDIA for years. So why would a company that's losing the graphics card war keep pouring resources into a motherboard platform that's already been sold, already paid for? And here's the detail most people glossed over: Computex isn't just any trade show. It's the single biggest stage the semiconductor industry has each year. AMD didn't casually mention this in a footnote, they put it on a slide, in front of the whole industry. That's a deliberate signal. The question is, who is it aimed at, and what does it actually mean? That's where we're starting today. And by the end, we're not just going to understand AMD's move, we're going to walk away with a framework you can apply to any industry. Everyone assumes AMD is doing this to earn goodwill. But when you look at the actual costs involved, that explanation falls apart. Here's a number worth sitting with: AMD has released over 100 different processor models on the AM5 socket. One socket. More than 100 SKUs. If this were purely a PR move, if AMD just wanted users to feel warm and fuzzy, they didn't need to do any of this. A press release saying we're committed to AM5 costs almost nothing and generates the same headlines. But that's not what happened. Every time AMD adds support for a new generation of processors, they and their motherboard partners have to go through the whole process again. First, there's BIOS development, the low-level firmware that tells your motherboard how to handle a new chip's power delivery, boot sequence, and memory timing. That's not a quick fix. That's engineering teams working in week-long sprints. Then comes compatibility testing. Every new processor needs to be validated across dozens of different board configurations. One bad pairing that causes overheating or random crashes doesn't just create a support ticket. It ends up on Reddit, then YouTube, then becomes a meme that follows the product for years. And then there's the coordination layer. Asus, Gigabyte, MSI, Ashrock all need AMD's technical documentation before they can push updates to users. Every generation, that cycle restarts from scratch. So the first thing we need to flip here is the premise: AM5 extended support isn't a gift to users. It's a recurring capital commitment that AMD keeps choosing to fund. That changes the question entirely. The question isn't why is AMD being nice? It's why does AMD keep deciding this investment is worth making? To answer that, we need to stop looking at AMD for a moment and look at what their biggest competitor has quietly been doing. While AMD has been doubling down on a platform most people write off as legacy support, NVIDIA has been doing something that, if you told someone 10 years ago, they probably wouldn't believe. NVIDIA has been letting the gaming GPU market slow down. On purpose. The numbers make this hard to argue with. In NVIDIA's most recent earnings, data center revenue accounted for more than 80% of total company revenue. Gaming, once the product line that built NVIDIA's brand identity, has become a relatively minor line item. But here's what makes this interesting as a strategic observation: it's not just the revenue split. It's the timeline. For most of the past decade, NVIDIA ran like clockwork: new consumer GPU architecture roughly every 2 years, steady cadence, predictable roadmap. That pattern started breaking down around 2022. The RTX 40 series launch was bumpier than usual. The RTX 50 rollout has had multiple sources reporting timing shifts. And the rumored super refresh cards, which NVIDIA has used in previous generations to maintain mid-cycle momentum, have been conspicuously harder to read. The instinct is to chalk this up to supply chain headaches. But that framing misses what's actually happening. When a company discovers that a single data center chip generates more profit than dozens of gaming GPUs combined, the rational move is to reallocate engineers, wafer capacity, executive attention, all of it flows toward the higher margin business. This isn't NVIDIA slipping. This is NVIDIA making a completely logical choice. But logical choices for the market leader have a side effect: they create vacuums in the markets that get deprioritized. That vacuum in the consumer GPU space is exactly what we need to keep in mind for the next chapter. Everything from here on is based on industry leaks, not confirmed specs. The framework we're using is if A is true, then B becomes possible, not because A, therefore B. That distinction matters more than it might seem, and we'll come back to why. The rumor circulating right now is that the flagship die in AMD's next-generation GPU architecture, codenamed RDNA 5, could pack nearly 2.5 times the compute units of the current flagship. Let's give that number some context, because raw specs rarely tell you anything on their own. Imagine a factory that, without moving to a new location or rebuilding its production lines, somehow raises its output ceiling by 2.5x. That's not an upgrade. That's a generational leap. It represents a fundamentally different philosophy about what the product is supposed to do and who it's supposed to beat. And here's what makes it historically notable: AMD doesn't do this. The company's GPU roadmap over the past decade has been defined by incremental, disciplined iteration. Small steps. Measured bets. The kind of cadence you maintain when you're resource constrained and can't afford a stumble. If the RDNA 5 rumors hold, the scale of the ambition is itself a signal AMD is telegraphing that it believes a window is opened, and it intends to walk through it at full speed. Now, the connection back to AM5 is real, but it's worth being precise about what it actually is, because it's easy to get this wrong. AM5 extended support doesn't mean that users who upgrade their CPU will automatically spend that savings on an AMD GPU. They might buy a NVIDIA 5070. They might go Intel. The platform doesn't lock anyone in. What AM5 does is shift the economics of upgrading. For users on the platform, the motherboard and memory question is already answered. They don't need to replace them. That means their next upgrade budget doesn't get split across 4 components. It concentrates. And when a consumer's upgrade budget concentrates into a single line item, the GPU, that creates a moment where a price-competitive, high-performance Radeon card has a real shot at getting on the shortlist. Put it all together, if the RDNA 5 specs hold, AMD will have used the AM5 platform to pre-position a pool of buyers whose budgets are already freed up, and then dropped a generational product into that exact window. That's not a product launch. That's a coordinated market entry. We've been building the case for what AMD is doing and how the pieces connect. But there's one question we haven't addressed directly: why is all of this happening right now, specifically? Pull the timeline back and you'll notice 3 things converging simultaneously, and this is the first time they've all lined up at once. First, AMD's CPU business has stabilized. That sounds like a mundane observation, but it represents a real shift in the company's strategic posture. AMD is no longer the scrappy underdog that had to undercut on price just to stay relevant. The Ryzen era gave them a durable share of the desktop processor market, and with that came the margin headroom to make multi-year platform commitments without betting the company on any single outcome. Second, NVIDIA's consumer GPU cadence has broken down in a way that has no real precedent in the past 15 years. Historically, NVIDIA used its product calendar as a competitive weapon, predictable enough to keep partners happy, aggressive enough to keep challengers off balance. The AI boom didn't just make NVIDIA richer. It changed what NVIDIA optimizes for. That shift isn't something AMD engineered. It arrived as an externality. But the companies that win long-term are usually the ones that recognize externalities before they're obvious and have something ready to deploy when the window opens. Third, the cohort of users who built AM5 systems in 2022 and 2023 is right now hitting the upgrade consideration window. These aren't people who need to replace everything. They need a GPU. That's the entire decision. When an upgrade cycle compresses to a single component choice, it fundamentally changes the competitive dynamic, especially if one option offers dramatically more performance per dollar than anything that came before. None of these 3 factors, on its own, creates an opportunity. Together, they create the kind of setup that only appears once every several years in any given market. The AM5 extension, viewed through this lens, isn't AMD being generous. It's AMD making sure that when the window opens, their users are already standing in the right place. Most analysis stops before this question. That's a mistake, because this is actually where you find out whether a strategy is genuinely clever or just looks good on paper. Let's assume the worst case. RDNA 5 launches late. Performance misses the mark. Or, and this is not hypothetical, this has happened before, the drivers are a mess at launch and the early reviews turn into a disaster. AMD has a documented history of products that impressed on paper and under-delivered in practice. Anyone who was around for the Vega generation knows what that looks like. If that happens, what exactly has AMD lost? The GPU market share gains don't materialize. That's real. But the AM5 user base doesn't disappear. The CPU business doesn't get weaker. The relationships with motherboard partners don't break down. None of the infrastructure AMD has been building gets damaged by a GPU miss. In the language of poker, the GPU is AMD's raise. AM5 is the hand they're sitting on regardless. You can lose the raise and still be in the game. That said, the counterargument deserves a fair hearing. If AMD's graphics division repeats the spectacular launch presentation, disappointing product cycle one more time, the long-term cost isn't a single bad quarter. It's credibility erosion. Trust among enthusiast consumers is a slow-moving variable. It doesn't collapse overnight, but every disappointing launch chips away at it, and once the AM5 goodwill gets fully offset by GPU frustration, the platform advantage quietly shrinks. But here's what still makes this strategy structurally sound: even accounting for that risk, the asymmetry holds. If the GPU lands well, AMD has a genuine shot at reshaping its position in the consumer market. If it doesn't, AMD remains a healthy, profitable company with a stable CPU business and a loyal platform ecosystem. That combination, meaningful upside, bounded downside, is exactly what separates a calculated strategic bet from a gamble. Let's zoom out one final time, not to wrap up AMD's story, but to extract the underlying logic. The intuitive explanation for why challengers succeed is usually some version of, they built a better product. And sometimes that's true. But the more you study competitive markets, the more you notice a different pattern running underneath, one that's less about the challenger's strengths and more about the leader's constraints. Market leaders tend to win by concentrating. They find the highest value battlefield, they pour resources into it, and they dominate it. But concentration has a cost. The more completely a leader captures one market, the more they are, by definition, pulling attention and capital away from everything adjacent to it. That's not mismanagement. In many cases, it's exactly the right call. But it consistently creates vacuums. NVIDIA didn't hand AMD an opportunity because NVIDIA got weaker. NVIDIA handed AMD an opportunity because NVIDIA got very, very good at something else. This isn't unique to semiconductors. When Nokia was at the peak of its dominance in feature phones, its entire organizational machinery was optimized for that market, and the smartphone transition happened right at the edge of its peripheral vision. When Walmart had refined its logistics into the most efficient retail supply chain in history, it had also made itself structurally slow at serving the long-tail, on-demand consumer, and Amazon walked into that gap. In both cases, the challenger didn't outmuscle the incumbent. They found the corner of the market where the incumbent couldn't afford to pay attention. The strategic question worth asking in any industry isn't just who is winning right now. It's what is the winner no longer paying attention to, and why? Because that's usually where the next move is being set up.